Greece and this election. We are expected to see a bounce today, and we're currently up about 0.5%. The materials doing really well, as are energy stocks. But how sticky are these gains? Many are saying they're going to be pretty short-lived.
Kate, and that's the key question here. Are we seeing a short-term rally, a medium-term rally, or is this a long-term trend that started in the marketplace? And really what the market is looking towards is not only that Greek election, but whether we're going to see a 1, 2 or even a 3 punch for the markets this week. We've already seen the first one coming out of Greece with a positive election result. It does look like those worries around Greece will now ease. We've seen the New Democracy Party winning around about 130 seats, and it looks like PASOK with 33 seats out of the 300 seats. So altogether, those market fears around Greece expected to ease. And now, of course, we're going to be focusing on the other key events this week. The first out of the blocks is the G20 meeting. Now, the markets are expecting to see that firewall that was announced back in April of $430 billion to be boosted. So we could get a positive boost out of the G20 meeting on Monday and Tuesday. And then, of course, the FOMC meeting on Tuesday and Wednesday, where expectations are growing around quantitative easing. And if we see that come through, we could see a medium-term rally on the markets. If we have a look at risk assets already this morning, we've seen a positive result for oil. We've seen the West Texas crude up by 1.5%, US futures rising 0.6%, and we've also seen the euro rising about 0.6%. So all up, it does look like a good day for the Aussie share market. We're seeing BHP out of the gates up by about 2%, so it looks like the Australian market in for a gain of at least 1.5% today.
Yeah, we're currently up about 0.7%, continuing to climb. Julia, some big company news out this morning. Fairfax, 1,900 job cuts. Those two major papers moving to compact formats. This represents a big restructure for the company. We knew something was coming, but did you expect it to be on this scale?
There was a lot of speculation around Fairfax, and has been for the last few months, and that's because of the extremely low valuations coming through for the company, with a price-to-book value of just 0.3. That means for $1 worth of assets, the market is only willing to pay around about 30 cents. So it makes sense to sell off some of those assets, and we've certainly seen that come through today. Trade Me, they've sold another 15% stake, getting around about $200 million for that stake. That's in addition to the 1/3 stake that they sold off last year in the IPO in December. And of course, since that IPO, Trade Me has been doing extremely well with a rise of 34%, while we've seen Fairfax shares going the other way with a decline. So it does look like Fairfax selling off some of its assets to try and lock in the discount that the market is providing for those assets at the moment. But of course, the other concern that the market has had is around the structural issues facing media companies, and that is adjusting to the media age. So some big announcements coming today in regards to the masthead, Sydney Morning Herald and The Age, that they'll be going behind a paywall, and we'll also see the tabloid, the size of the newspaper being reduced to a more comfortable size, to a tabloid size. So some big announcements coming through today, and that's on the back of last week's announcement, which was around that profit downgrade. The company saying that it expects second half revenues to be down by around about 8%. So altogether, it does look like some big shake-ups at Fairfax. This is part of its Future of Fairfax plans, and I guess the market has been signaling for a while that it needed to adjust not only to the cyclical challenges it faced, but also the structural one.
Keeping an eye on today.
Well, we've seen some extremely big moves today. We've seen Maverick Drilling out with a 27% gain this morning. We've also seen Linus with a jump of about 13%, expecting to see a number of short positions being sold out, resulting in some very big moves in terms of stocks. But all up, it's risk on today, and that means those high beta areas like the materials, the energy, the industrial space will outperform. On the flip side, though, those defensive areas will be the underperformers. Also, we see Gloucester Coal going ex-entitlement and ex-special dividends, so don't be surprised to see a big drop in that stock today.